Good afternoon. Today's Friday, May 12th. This is Brian Shannon speaking. Trying to get a little bit more professional looking video here, and hopefully, I think I have the clarity cleared up with this video as well. We'll see when it's done. Thanks for visiting my blog, alphatrends.blogspot.com. Let's take a look at the markets. As you know, I've been very cautious about the market. I was trying to make that clear through my writing this morning as well as the video last night. The NASDAQ 100 closed at 4019. It finished December 31st of 2005 at $40.41. Funny how you don't hear CNBC talking about how the Nasdaq 100 is now down for the year. That's pretty serious if you ask me. They want to focus on the Dow now. Now it's 200 points or whatever it is from an all-time high. The Dow's 30 points or 30 stocks rather. I really don't pay too much attention to the Dow. When you look at the Nasdaq. Right now, I drew in this trend line here. This has been support for the market a couple times, late last year and then this year. If we look at the weekly time frame, again, what we had here was first of all, what really brought this decline on was the breaking of this trend line, number one, and then you can see that the market is coming down to this area of prior resistance. Now, just because it's prior resistance doesn't mean it will be support, but a lot of times that's the way it does work is that, the price has memory and buyers will show up in there. What I think is going to happen with the market is not necessarily just the NASDAQ 100, but we've got to look at the composite as well. The NASDAQ 100 right now, the NASDAQ composite right now, the 200-day moving average is at 2228, whereas the NASDAQ 100 tested its 200-day moving average. This composite still has a little bit further down to go, and I think that's what we're going to see happen, is that we're going to see it come down to that 200-day moving average and maybe a little bit further. That's still about 20 points away or another percent. So continue to stay on your toes. The market's closed right on their lows today, closing very negative. Maybe Monday's the day where we see that little washout early in the morning. We'll see. It's tough to say. The S&P 500 also, yesterday I thought perhaps there would be some support at 130. Support is nothing more than something that we can evaluate it in hindsight. All we have now is potential levels of support. We can look at it and say, well, it looks like the market has support at 128. Not necessarily true. The market has had support at 128 in the past, and it might find support there again, but it doesn't mean that that level will continue to hold. So continue to be real cautious on this market. Interest rates, we had the Federal Reserve raise rates again this week. The 10-year bond yield is in this phenomenal uptrend. Think of this as a stock. I mean, if this was a stock, it'd be a great uptrend. It might not be phenomenal as far as the economy goes and that sort of thing, but it's in a fantastic uptrend. There's no signs of any kind of topping in here. It closed at a multi-year high here today. Looking at a monthly chart, looks like we've got room. I would say probably up towards that 5.5 level or so. Up. That's not the tool I wanted to use. I apologize. So 5.5% or so. Looks like that's where this 10-year yield is destined to go, in my opinion. So let's take a look at some other strong markets. Gold. Gold continues to trade very strong. Couple red candles. Real big volume too. Volume peaks at turning points. Diminishes as the trend becomes established. Doesn't mean that tomorrow is not going to see bigger volume and it's going to go higher. But we did see very heavy volume here, and the market started to sell off a little bit. So perhaps we're going to see a little bit of selling in there in the gold. So I'd say if you're in gold stocks, you probably want to raise your stops a little bit. Yesterday we took a look at Google, and I had mentioned how that failed breakout at 400. Right in here on the 10-minute chart, we can see it more clearly, how that failed breakout at 400 would probably lead to continued decline. And although it looked like it was finding support at that 50-day moving average, very similar to the day before when I pointed out the 10-day moving average at Avaya, moving averages are only a potential area where there might be support. So if you bought at the 10-day moving average on Avaya, you'd be down pretty good. Now, do you buy at the 20-day moving average? No, but you look at a shorter-term time frame to see if there's any signs of this market bottoming out. And clearly, in the case of Avaya, it doesn't look like there's any signs of it. This downtrend is still very much intact. Stage 4 decline, stage 3 distribution, stage 2 uptrend. Now we need to see a stage 1 accumulation followed by a breakout back to the upside in order for Avaya to be a good stock. And that doesn't look like it's going to happen right now. The damage in the NASDAQ 100 is really severe. Look at Expedia today. Expedia was a bad stock to begin with. These stocks that gap lower are not a good buy. One bad quarter usually brings on another bad quarter. And you'll see that these gaps are almost exactly 3 months apart. That's because they're earnings related. So when these stocks gap down, don't think that it's a good deal like Microsoft. Microsoft is a piece of garbage as far as a stock goes. Might be a good company, everyone uses their product. So what? If you're interested in making money in the market on a short-term basis, stay away from Microsoft. Stay away from eBay. Stay away from Electronic Arts. Electronic Arts looks like it might have real big trouble here. Looking at the daily time frame, we saw that first big gap lower. And now when we back it up to a weekly time frame, or actually even a monthly time frame, we can see here the significance of this breakdown right now. Perhaps it's going to find some support in here, but if this level doesn't hold, then Electronic Arts could see the mid-30s or so. Not making a prediction here, but just something to be aware of. But again, the damage is severe. Earlier today, I said I liked the way Broadcom was trading. It's coming down to a 200-day moving average. When I said I liked the way it was trading, I meant as an intraday trade. Clearly, it's in a bad downtrend. Here we had stage 1, stage 2, these moving averages cross up in here, stage 3 distribution, all the moving averages declining, stage 4 decline. Here on the 10-minute time frame, it looked like it was bouncing early on, no sign of it at all. The only really good stock I saw today, which I didn't participate in, was one that we were looking for a breakout, I think on Tuesday, was Elan. I missed the stock, but Elan did break past that $15 level and rallied nicely. Tough to buy on a stock, as it's breaking out on a day like today. But had you done it in Elan, it would have been a nice trade, and hopefully some of you were involved in that. I know I wasn't. I had mentioned this morning ATHR. ATHR was something that I was looking for a potential bounce, and the scenario that I outlined didn't occur. So I can't really say that it worked, but the stock was up nicely today. Avicii was another stock I was looking for a potential bounce in. This one changed, it closed down 2 cents or so, and the other one was OmniVision. These were meant as day trades only. We got a little bounce in OmniVision, but stay away from these stocks. We saw that it opened down here, closed up there on OmniVision. ATHR opened low, closed up over in here today, and then the Avicii opened here and closed pretty much unchanged for the day, maybe down a penny or two. So the market continues to act weak. I would say continue to be cautious. It's an ugly tape out there. So I will be back this weekend with some ideas for you. This is just meant as a kind of a post-market wrap-up and also to test to see if I have this video straight so that you guys can see the charts more clearly. Again, this is the NASDAQ 100 down for the year. I don't think you're going to hear CNBC talking about it, but it's pretty serious. So, again, thanks for taking the time to view my video here. This is Brian Shannon from alphatrends.blogspot. All the charts that you saw there are brought to you courtesy of Realtick, the trading platform that I use. And again, none of this is meant as trading recommendations, just ideas for you to potentially look at so that maybe you can make some money in the market. Thanks for your time, and I will talk to you at some point this weekend. Bye-bye.